Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock with news. Central bankers will be waking up with a new inflation threat ahead of them. First up today, we have a sharp oil supply cut announced by OPEC earlier today. They're reducing supply by 1 million barrels a day. Markets weren't expecting this, and OPEC clearly wants higher prices. Saudi Arabia led the cartel by pledging its own 500,000 barrel a day supply reduction. They were followed by Kuwait, United Arab Emirates and Algeria. And Russia said its production cut, which was implementing from March to June, will continue until the end of 2023. The move is likely to complicate central bank efforts to rein in inflation. In other news, in China, their factory expansion extended to a third straight month, even if it didn't quite rise to the expected level. But according to official data, the service sector is positively booming. But before accepting those conclusions, it is probably best to wait until the private survey results, which arrive later today. In Japan, stats are a different story, accepted as unvarnished. They reported a surprise rise in industrial production in February, far stronger than anticipated, and they reported far better retail sales for February than expected as well. If they keep this up, the world's third largest economy may become a driver of international trends. In the US, data out over the weekend showed personal incomes rose at a 6% rate in February from January, and their personal spending rose at only a 2.5% rate. This is not a sign of growing household stress there. The inflation measure in this latest data shows it receding, running at an annualised rate of 3.6% in February from January and a 5% rate from year-ago levels. That is actually its lowest rate since August 2022, when it was on a steep rising trend. In Australia, CoreLogic's March house price report shows a 0.8% rise in February from January, gaining back some of the 8.7% fall for the first part of the year. This is actually its first rise in 11 months. The US Treasury 10-year yield starts today at 3.47% and down 1 basis point from Saturday. And the price of gold will open today at $1,970 an ounce, and that's $2 down from Saturday. And oil prices were little changed on Saturday, just over $75.50 a barrel in the US, while the international Brent price was just under $80 a barrel. But following today's supply cuts, these prices are sure to rise. And the Kiwi dollar is little changed against the US dollar. Now it's 62.5 US cents. Against the Aussie, we're firmish at 93.6 Australian cents, and against the euro, we're firm too at 57.7 euro cents. That means our trade weight index now at 70.6, but that's up 40 basis points in a week and up 30 basis points from the start of March. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.